No, no, you can ask me when I thought of it. You did the first class? Yeah, last one. No, yeah, last one. No, I didn't. Because it was my first choice. Cái file nào cho con đấy? Không mình chơi mà ai có nhưng mà cái đã gặp ảo hay qua yeah. Good day. Good day. Evening. Hello. Hey. Thank you, Mr. Father. What you answer? What you answer? Oh, choosing. At least it. Yeah, because I was the game. I need to know what's happening. So, essential is still on. Where's that? I don't know what he's doing. I don't know what he's doing. So, yeah, my sister called me and she said that she's here. My sibling, so I don't know who told her. She said that's what she began. You're at home, and then you got a those questions. I don't know. You understand? Hello? Yes. It's a one. So I think okay, then. Oh. Yeah. Yes, yes. I know you were comments on that. Very good. Very good. Yeah, I think he's able, but I don't know what he's like.
Hello, hello, hello. Good evening. It's been a long day already. Okay. On it. Looks like the battle rages on with virtual. Some persons have been asking about virtual and I couldn't answer because the jury is still out. Apparently, we have a mixed blah, blah, blah. Some people would rather come and sit and others wanted to be on virtual. And so this has a dilemma, they say. So unless you guys start walking past with placards and send emails to the administration and say, we want I don't know about you guys, but COVID has certainly spoiled me. As a lecturer, the last 2 years plus have been just heavenly. I have lectured in my work clothes, I've lectured in my pajamas, I have lectured. It was amazing. I couldn't believe that I actually spent 30 years plus coming to the classroom. The old days, but that's who we are. So,
Mr. Wilkinson,
hi.
is the class divided? How many persons are virtual and how many persons are face-to-face?
Is this Ms. Major?
Mackenzie.
Mackenzie.
Shadell Mackenzie.
You were here last week, Shadell?
No, but I WhatsApped you today. We spoke via WhatsApp.
So what part of the world are you in, Shadell?
I'm in Nassau.
So how the heck you get virtual and the rest of us are here suffering?
Oh, that's a secret. I'm sorry. I have a responsibility. I have no choice but to do virtual.
Oh, that sounds fine. That's okay. But that Shadell doesn't help the rest of us sufferers in this room. So far, the only persons who are virtual are you and Miss Inago and Miss Major.
I'll be virtual next week.
You'll be virtual next week?
I thought it was an option.
Well, if it's an option, how come nobody gave me that option? Yeah, they gave me that look like. Sure. Yeah. What made you say it was an option, Shadell?
Well, I didn't. I voiced my situation and they made a provision for it. I didn't know it.
Indeed.
They didn't say it.
I understand completely.
And my first case was my situation, and so I felt like they were accommodating.
Right.
But now, after what you said, it seemed as though it's a toss-up. I mean, it's whatever people choose. I don't know.
Yeah, so maybe if enough persons call in and say whatever they need to say, perhaps there might still be hope. It's up to you guys, okay? I am bound by the directives of the administration, but if you guys are the students and decide what you decide, then they would have to consider it in your context as students. So, I shall leave the issue of virtual in the hands of the people. Are we still in a democracy? You guys decide how you're gonna. And it's simply a matter of saying, I would like to, or I'm fine. And then at the end of the day, I'm sure the message will get across and the decision taken, just like Shadell. All right. In the meantime, Shadell is at home with her feet up and we are here. So, okay. Does everybody have a textbook? Who has a textbook? 1, 2, 3. Great. You guys have this Needles and Powers 12E? 12E. Man, they're having fun. The hell? I could have been home during my lecture with you guys and having coffee, like, go tell my wife you need to bring another cup of coffee. She's ready to have a pom-pom later. I tease her all the time. I said, what are you still wearing, pom-poms? So, they are having fun with doggone. Needles and Powers, 12E. Okay, that's the textbook. I think the Institute has textbooks, they say. So perhaps when we're done, you can check with them if you don't have a textbook. If they have any left, then you can arrange to get one. If you don't, if they don't have any left, then you have to wait until the remaining ones come in. Did you guys get any copies of chapters 1 and 2 who do not have textbooks? No? Okay. Well, we will have to forge ahead. 90? Yeah, so. Are they actually here? Okay, so those of you who don't have a text yet, you can go ahead and arrange to get one as quickly as you can, like maybe sometime this week if possible, so that you can start catching up on your reading, which of course right now would be chapters 1 and 2. Okay. Because as soon as you can get to those 2 chapters, that would be fantastic. That will get you on a roll. Okay, because those are the ones that we will attempt to complete this evening, so that we can get on course as quickly as we can and then move forward. Even though this is a 14-week course, there's 14 weeks. Time still passes quickly. Okay, for sure. Okay. Does that work? Vincent.
Not yet, yeah.
Not yet. And log in. All right, Scott now. On the way. Shay, is it? Shay. Scotiabank on the way. Monique. Monique? Oh, and over the corner. Okay. Commonwealth Bank, yes. Great. Monique, you're here. You made it. Try to attend as many classes as you can, if not all of them. It's very important, in addition to your reading, to be present, to hear stuff, question stuff. When I give assignments and you do the assignments, and so you may have questions when you come in. This didn't balance, that didn't work, why did we have that? So being here is very important to be part of the whole process. Accounting is quite analytical and also quite dynamic. So involvement is absolutely important. That's why I give a whole 10%, as I said last week, for participation and attendance of class. Okay, very important. Okay. Something lock on that. Cameron, is it? Cameron, yes. Okay. The usual way to spell Cameron. Okay, different. Taisha. Right there, yes. Yes, Johnson. Victoria. Victoria, okay. I'm still associating faces to masks and other stuff to help me identify you guys. Crystal.
Yeah.
There's Crystal, okay. By the way, these reading glasses only work right here. And those glasses are designed for me to see down there. They stop right there for some reason. So I don't know what the heck is going on. All right, Crystal. Way to go, you're here. Teranique. Ivania.
Hi.
Are you online as well, Ivania?
Hello?
Ivania, are you still on? Are you online tonight?
No, that's not you. Yes, sir. I was online last week as well.
I know. How come you could be online twice in a row? Thank you.
Yes, sir.
Yeah.
I don't know if you get it.
I'll just, yeah. Ivania?
I didn't hear you. It's breaking up.
There you go. Okay, Ivan,
Hello?
you're here. You're here. Great, great.
Yeah,
Fantastic. Whose name I didn't call? Tell me again.
Felony paper, it's my first time.
Okay, so I need you to add your name and show me.
That's my first time.
And two new students. Bucknell, that's right. Bucknell, when you made a petition yet to, because you're gonna be driving, you said that's 14, read it, it's 14. Week like SpongeBob, week 1, week 2. Okay. Who's here? Yeah. Who else is here? Okay. Where is Miss Inagua? Miss Inagua, are you there? Find the way of the salt mines. Well, again, one way or the other. Somewhere along the way, all of this reading is going to get on your nerves and you put you on notice. But that's okay. That's what being a student is all about. It's not intended to be fun. It's intended to be work. You have fun when you're done and pass your course. Then you can go and celebrate at Fusion or wherever folks go to celebrate. But during the semester, if you feel like you're having too much fun, you don't feel stressed, and you're doing something wrong. You're probably not reading enough. You're probably not doing enough assignments. You're probably not working hard enough. And that's not good. You want to be as busy as hell until it's done, and then it's begin. All right, so we have two new students tonight. One is boy, something Capron, is it?
Felony.
Felony.
Yeah.
Okay, Veni Felonique. Okay, Felonique. Last week we had introductions. Can you introduce yourself to me and your colleagues?
Okay, good evening. I'm Felony Capron. I work at Easy Terms.
Easy Terms?
Yeah.
Interesting. What is that, by the way?
I think Tulum.
Sorry, 1 second. Hang on. Hold that thought, Felony. Hey. Hey, my son, how are you? Yeah, I'm in that house. I'll call you in a minute. That's my 25-year-old baby. He hates when I say that. Dad, I don't care what you say. I don't care how old you get, mister. I still see you in the campus. Okay, I'm sorry. Felony, keep going. What is easy sales?
Easy Terms.
Easy Terms.
We do financing for government workers. We're also known as Easy Payday.
Okay, which means that people can do what?
Just get loans.
Okay, up to how much?
Up to 30,000.
But you have to be a government employee.
Permanent government employee.
Permanent, nothing else. I know that's part of your security thing. So you have to make sure you don't have too many bad debts. Okay, interesting. Anybody? Well, Mr. Ministry of Health might be interested in that, who's not here yet. Okay. And you're doing accounting because, Felony?
I've been working in accounting for some years now, but I don't have an I did the staff for some years.
Okay.
And it's been years that I've had studies in it. So I want a refresher.
Refresher, indeed. Then you are definitely in the right place. All right, welcome aboard. Welcome aboard. If you are also marketing for your company, you have a whole room. I don't know how many people are Only government employees? Not bankers. You don't trust bankers?
No.
She's been indoctrinated already. For good reason. Okay? Remember I told you I spent a few years as a loan manager at Bank of Nova Scotia back in the dark ages when we had afros. Can you imagine flicking afro? So yeah, I get it completely. Okay. All right. Okay, welcome aboard. Thank you, Felony. And last but not least, this is leaks. Any Felony Shawnee. What the hell's going on? This is a conspiracy? Okay, Shawnee, what's your last name? Russell. Shawnee Russell. Introduce yourself to us then. Oh, yes. Okay, and you're doing accounting because? Good. You'll be happy to know, though, that loan officers eventually, depending on what kind of loan officer you become one day, also do loans for small, medium, and large businesses. Businesses tend to have something called financial statements. And if you do not do an accounting class as a loan officer, you will not be able to properly evaluate those. So yeah, so you're not just here being cute. This will be very helpful for you if you continue on as a loan officer. As accounting is with just about anything. Most of us in life need it, we just don't know we need it. Or we just don't think we need it. Okay, in one form or another. All right, so those of you who have a textbook, looks like most people now. Can everybody online hear me? Ivania?
Yes.
Yes, I can.
Okay,
Yeah.
great. If you lose me for any reason, make some noise so we can get it sorted out. Okay. Can you guys see the board tonight?
Yes.
Great. How are you doing on that? Great, great. Okay, lovely. So now we're good to go. Okay. Vincent. Yes, sir. Yes, indeed. Maybe I'll get a commission. The lady behind you is a new student in our class. She works for a company that does loans only for government workers. Okay. Just thought you might. See how marketing works? Now, if I didn't say anything, he would be ignorant and would not know that sitting right behind him might be a savior when he needs money. What we call in the Bahamas, dead bad. Or not so dead bad, just need it. Want it. Could use it. To impress his wife in whatever we do. Guys do weird stuff. How I know? Absolutely. Take a good look. And you never know. All right, let's open our textbooks then. Do you have a textbook? Yeah, perfect, perfect. Now, this week, you guys need to go ahead and read chapters 1 and 2 completely. I intend to give assignments, but I wouldn't suggest you attempt the assignments until we've done our class substantially and you've read the 2 chapters, the first 2 chapters. The assignments, remember, are not designed for you to commit suicide and lose sleep. They're designed for you to practice the material, go back into the text, work it through, and raise questions on any issues you get stuck on. That is entirely the purpose. Okay? I will not be going through to mark every single debit and credit you do. What I will do is wherever you get stuck, I will clear the air and I will take your papers and look at them and say, great, they attempted to do this. If I see any stuff that you need to touch upon, I'll bring it to the attention of the entire class. So you will always be on track one way or the other. Okay. So let's go right into chapter 1, where we have the very first important stuff on accounting, and that is, what is accounting? Yes, that's important. We need to find out what we'll be studying. So let's start there. What is accounting? Anybody? What did I tell you it is? I don't mind if you read it from the text. That's fine with me. What is accounting? Money. Okay, that's one informal definition, dealing with money.
Information system that measures, processes, communicated financial information about a business.
Yeah, your textbook is very specific. At the end of the day, it boils down to money, and we'll talk about money later. But the first thing it says is that it's a what kind of system? Measure? Okay. It measures. First thing accountants and bookkeepers need to know. It measures. And then after it measures, what does it do? Process, yes. And you guys, this is all going to make sense soon. Right? Don't mind if it's like measures, what the hell is that? And then what's the third thing it does? Communicates, see? Communicates. That's what accounting is all about. So if you don't remember anything else on this semester, shake your head like, man, that was wrong. Okay? It measures, in other words, it looks at transactions. Okay. Anybody knows what a transaction is? Have anybody ever been involved in a transaction? I sure as I hope so. Everybody. Everybody in one form or another. When you go to buy groceries, that's a transaction. Yeah, you're buying and selling going on. When you go to buy a dress, pay school fees, whatever you do that involves the exchange of goods and services and money, that is a transaction. And so accounting takes that transaction and has a very specific way to measure it. Once we see that a transaction has occurred, then we have a method for processing it, okay? Through something we call journals, ledgers. All these funny words will be well known to you guys in a short period of time. And then once we process the transactions, then we communicate it using what we call financial statements, such as income statements and balance sheets, okay? So welcome to your new life for the next 14 weeks, and for some of you, beyond. Other persons refer to accounting as an economic entity, and really an economic entity is any entity that is involved in business and financial transactions. No stress. And if you look at the exhibit, anybody look at the exhibit like out of curiosity? What do you think that exhibit is trying to tell us? Where are those arrows going? From where to where?
Information, communication.
Interesting. Well, first of all, on the top left-hand side of the exhibit, what is in that box? Business activities. We all know what that is, business activity, whatever that is. That arrow goes down to the first box, which says what? What does it say? Measuring data or information, okay? And then the arrow goes over to another box that says the processing of that data, see? In other words, it's only a diagrammatic version of the definition so that you can get a picture now in terms of how things flow in the business world. And then the other arrow goes where? Communication, which is the financial statements and blah, blah, blah. And then the arrow goes up again to where? The decision makers, okay? If you're head of your household or parents, then you're a decision maker. If you're head of a firm, you're a decision maker. If you're head of a church, you're a decision maker. Government, whatever. This information comes up to you and communicated to you, and you take that information and make decisions. So when you see, for example, your paycheck and combine it, you look at it and say, this is small, you can only can afford one child. Should you wait until you can afford children to have that?
No,
never have them. Like some people say, never. For sure, you'll never have them if you wait until you can afford that. Only some people can wait until they afford, like rich people. And funnily enough, rich people, they usually only have one child. The hell? If they have two, they start stressing like two. But poor people, we do the opposite. We cannot afford a lot of children, but oftentimes we do what? Yeah, we help them. Which is a good thing, because when war breaks out, if we didn't have poor people with a bunch of children, who would fight? Because rich people hardly have any children. Huh? Or not at all. Yeah, like 30, 40 something. Like, oh, we may as well have one. Then they struggle with that one. Strange irony. But the whole point is the decision of children is an economic decision. The children to run a business is an economic decision. Wherever there are transactional issues involving buying and selling, exchange of resources, it's an economic activity. Now, the other thing you need to know at the bottom of that page is the difference, and going to the top, between financial accounting, bookkeeping, and what we call management accounting. Okay? The difference between financial accounting, bookkeeping, and management accounting. A lot of people think they're the same. In some ways they are. In some ways they're not. Okay? Financial accounting produces financial statements for persons outside of the firm. Does everybody see that? In your quick read?
Yes.
Yeah. Like back in the day when I was a student, and the textbooks and nothing, I just get the text, I just do a little quick read, the first sentence. See, stuff like that. Until I can get to it. Bookkeeping is a significant part of accounting, but it does not cover the world of auditing. In other words, it takes the measuring, processing, and communication up to the financial statement stage, and then the bookkeeping process ends. The financial accounting part kicks in because it includes this, plus it includes the audit process, the tax process, which bookkeepers could actually oftentimes involve in, but they're not. Their training does not extend to auditing and taxation. It extends to the preparation of financial statements. Now, we have some bookkeepers who are very keen. They're not CPAs, but they are professional bookkeepers, and they study auditing and tax issues on their own. So they have knowledge of how it works. But as far as certification is concerned, the bookkeeper's work stops at processing of financial statements. Okay? The financial accountant process goes beyond bookkeeping into taxation and auditing, etc. The management accountant, on the other hand, does this stuff as well. But the management accountant also does some other stuff like processing internal transactions. For example, if a management accountant works for a manufacturing firm, they want to know how many items are produced each week, what's the cost. They do a lot of costing estimates, etc., inventory estimates, purchasing, procurements, and basically managing the cost of the firm internally. Okay? So these three groups, while they have similarities, oftentimes they do three very different things, as you can see. But they certainly, to some extent, all measure, process, and communicate. It just happens at a different level, depending on which of the three you're actually doing. All right. We talked about business transactions, so we now know what that is. And you'll know better when you get to reading the chapters. Try not to take any shortcuts in reading the chapters. Sometimes even persons are new to subjects. They're like, I'm tired. This doggone thing is too long. I need to sleep. I'll just read the first paragraph or whatever and see if I can get away with it. Don't do that. Read the entire chapters as you go. When you get tired, stop, take a break, sleep, go back to it, but do not fail to read all of it. You can only benefit if you do that. If you take any shortcuts, that's never good. Okay? All right, let's look at the bottom of page 3. You'll see that there's an expression called money measure. Somebody said earlier, money, accounting is money. That's the part of accounting that's money. How is it defined in the first sentence? Money measure. Anyone?
Business transaction going forward in terms of this concept called
Yeah, all business transactions are transacted in terms of money. If we didn't know that formally before, we certainly know it now, but I'm sure we all knew that. Wherever we go, we don't pull out goats and cows and chickens and fruits and vegetables anymore. We used to do that in the old days, very old days. Right? Nowadays, we use money as the medium of exchange. Everything in a financial statement is in dollars and cents, or the relevant foreign currency, which they show you in the middle of the page. What other currencies can we consider when we're doing financial statements according to this textbook? Right in the middle of that page, next page 8. Is it 4? What other currencies can you consider? US currency, Japanese yen. What else? British pound, Canadian dollars, euros. Anything else? Mexican pesos. Yeah. Japanese yen. And of course, there are many other currencies around the world. We just don't have it there because they are of a lesser quality currency. Okay, the ones in your text are the ones that are traded more popularly around the world. There are other countries that have their own currencies as well, but the currencies are so weak against the other currencies that are here that they're not mentioned in your text. But they're there. Okay. And their financial statements are prepared in those currencies. But if they want to do business in the Western world, for example, they may have to convert their currency to what? Canadian currency, US currency, euros, etc. Okay, folks?
The currency we have here considered the
Bahamian dollar?
Yeah.
No. The US. No, the B dollar, you cannot spend anywhere.
Nowhere.
No.
So that's why I asked that.
In that context, yes. Our dollar is not a trading currency. What makes us unique is that our B dollar is exactly equal or on par to the US dollar, which means that we can trade it for the exact amount. That's what makes us unique.
But we can, like the US dollar, we can't carry that nowhere else in the world.
The B dollar? No.
US dollar,
Would we
can't spend it nowhere else in the world.
US or B dollar?
Our dollar.
No. But we could convert it to? And then go anywhere in the world. How's that? On the other hand, somebody pull out a phone and tell me, you guys may not know, if you go to Google and type in currency exchange and tell me what what one Jamaican dollar is in US. One JA dollar. Anybody can do that? Go into Google and type in.
It's like that's like $107. Oh boy.
Maybe more.
Yeah, more.
Much more.
Yeah.
The $1 US.
I know, but I can't remember it offhand. But I know it's a lot.
It is. When you get a moment, check it out.
It's a lot.
While we take this dollar for dollar thing that we have on par with the US dollar, you go to Jamaica and you know, sorry? JA dollars to $1 US.
Is 151 81 cents
to $1 US. There you go. So if you have $1 US, you can go and buy 150 Jamaican dollars. But if you have 150 Jamaican dollars, how many US dollars can you buy? One stinking dollar. That's how weak the currency is. We don't have that problem yet. And pray and hope to God and Jesus that we don't. Bahamians will take it for granted, though, because we haven't really suffered to that extent yet. COVID or no COVID, we really haven't suffered to that extent. Even the Canadian dollar is 78 cents to the US dollar. But the Canadians do that for economic reasons, not because they have to. The Jamaicans do it because they have currency shortages. They're trying to build up their what? US dollar reserves, which are very weak relative to, say, the Bahamas. The reason why we are par dollar for dollar is because our reserves are still very strong, our US reserves. That will not the case. And what causes that to happen? Because tourists keep flocking here for some reason and leaving US dollars in this country. If that ever stops even by 50%, dog eat out. Budding accountants and future business people. That's why it's there. It's a measuring tool to remind you that financial statements are not necessarily in US dollars only. They're in the currency of any currency of the world where those financial statements are done. Okay. But I just thought I'd throw that little bit in for your own information. All right. Also in the middle of your text is an expression called separate entity. Anybody saw that? Separate entity. Page 4 in the middle again. What is a separate entity? How is it defined?
For accounting purposes, the business organization is separate, distinct not only from its creditors and customers, but also from its owners.
My. Which means that if any of you ever go into business in the future, whatever your business is should be kept separate apart from your personal affairs, your personal accounts, your personal everything. That's what the separate entity concept means. Business affairs should be kept separate from your personal affairs. A lot of small business people in the Bahamas and around the world mix them up. They have one account, my account, and my account. So they put all their personal money in that account, put all the business money in that account, put everything else in that account. And they have it all jumbled up. And many of them don't want to have financial statements done to separate and clean things up. Because they don't want to pay an accountant and a couple of lousy bucks to do it. Some of them even think they're accountants. Any fool could do that. But they gladly pay lawyers, don't they? Don't we? Doctors? The doctors say, listen, they call me 3,000, they find it right away. As soon as they need financial help, they won't pay the accountant $250 or something. But don't want to pay. So I don't need that. I don't need it. I got this. I did an accounting class back in 1980. Any fool could do it. Because they don't really understand until the business does what? Shuts down. And by then, makes no sense calling them an accountant because the accountant is not a magician. The accountant's job is to take current information, organize it for you so you can see, separate it from your personal affairs, see, separate, so you can see what's going on. And then see that, remember the diagram? That goes back to who? The decision makers, which is whom? Yeah, the business owner or owners. And that's the whole idea. Wow. Some food for thought. So you can see, even before you get into the debits and credits of accounting, which we haven't said anything about yet, there's a whole lot of little itsy bitsy things you need to know. And you will learn throughout the process, which is why I say, once you're done, a lot of things will be under your belt if you so desire them. That will be helpful to you in the future that you do not even yet know or see. How do I know that? Okay, well, this stuff in my hair is not dying. I've been there, done that, so. I encourage you to learn as much as you can from the whole process. Don't see it as, oh, God, big classroom. Don't do that, even though you may feel that way. Grab everything you can, because somewhere in the future, stuff come up. And you might and will. All right. So the separate entity concept means if you ever open a business of your own, please do not mix up the personal affairs of your life with the business affairs. Keep them separate so you don't make a big mess, which many people still do. The other thing you need to know that there are 3 forms of business entities in the world that you as an accountant or even non-accountant need to know. What are those 3 forms? I always ask that in the test questions, I think, because it's important to know. What are the 3 forms of business entities? Yep. Yep. Corporations. Sole proprietorships, partnerships and corporations. You need to know the difference between the three of them. You will see that after I've spoken and after you've read. So proprietorships typically are those businesses that have one owner. We know a lot of them. Here in the Bahamas, it's my business. Mine. I built it. I did it. That's a sole proprietor. Okay. One single owner. Partnerships tend to have two or more partners who come in together, like the medical profession, the accounting profession, engineering profession, and any other partnership you want to start. Open a retail store and any other type of business, where you have two or more persons come together to get the business going, no matter what type of business it is. That's a partnership. Usually it's governed by a partnership agreement saying who will get what, when, and where, and why. Has anybody in this room ever been a part of a partnership of any kind? Yeah, in business?
Restaurant.
Yeah, how did that go?
It closed.
Yeah. I do admire your being honest about it. Because you're honest about it, you and your colleagues will discover something interesting. First of all, restaurant business is risky business. That doesn't mean they don't work. Some of them work, but many of them do not work. You have to be running a tight ship when you run a restaurant business, period. The other problem with this situation, partnerships can be tricky. You have to be careful who you partner with.
Exactly.
True or false?
That was my problem.
That is not only your problem, that is a problem that many people still continue to have. The problem with a partnership, it appears at the beginning as everything looks fine, correct?
Yes,
and then we start discovering things about our partner that we cannot tell from the surface. It just starts coming up eventually. And then issues that involve money become even more interesting because partners start changing because money changes people. And so you're a nice, sweet, professional, ethical partner, so it's saying eventually over time starts doing some weird stuff. And that puts a burden on the partnership, on the relationship. And nothing can burden a partnership more than money matters. But it's not always money, it's other stuff too. Personality clashes, different perspectives. I want to go this way, I want to go this way. Just like being married. That's what makes marriages so complex. Because a marriage is a partnership, two people. Two or more people, it's a partnership. And one of the biggest problems in marriage is the same problem in any business relationship, which is money. Check the statistics, you'll find out. Money is probably the number one reason why marriages suffer and fail. Money, 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 money. Who's in charge of the money? Who's going to get the money? The money, the money. Since I have the money, I'm in charge. You shut up. And then people get mad and say, don't tell me shut up just because you have more money. I make more money. Whether it's the husband or the wife, doesn't matter. Whoever makes more money, they start acting funny. You don't have to believe me. Give it a shot and see. That's just how folks, for some reason, are. I was teasing my wife the other day forever. I said, if you were ever to get $1 million, I wouldn't say I'll leave, just watch your stitches. She said, what do you mean? I said, because maybe if you get $1 million, you might start forgetting that I'm your and think you can behave any way you. And you are able to do that because you are an individual. But I will not what? Tolerate it. She said, well, I would never do that. I said, I know, sweetie, but money is a strange, bad fellow. Okay? I'm just telling you that from a business perspective now. So, because you guys are youngsters, most of you, and you will find yourself in these things in one form or another, whether it's a business partnership, marital partnership, or whatever. But money is a very strange common denominator that doesn't fare so well. You have to really really, really be able to work together, be of a great integrity, and all these things for it to work. People start getting greedy and power struck and all kinds of weird stuff in business and otherwise. Okay. So it's not just a matter of the accounting process, see? That's the formal part of it, but there are some other things that go on that impact it, as you discovered, yes? Yeah. So certainly, if you were to consider another partnership, it may not necessarily, it will not be a partnership necessarily, and if it is, it will certainly be from a different perspective, for sure. He found out the hard way, yeah. And then, of course, we have the third type of business entity, which is the corporation. The corporation is what we call a legal person, meaning that it's established by law, incorporated through the law, as opposed to a sole proprietorship and partnerships. These are real, live, natural people. Like you can pinch them and lick them in the hair with a conch shell or something. But a corporation, you cannot. It's only a what? Legal entity, incorporated in law, made up of shareholders who put money into the business, and therefore they become the owners of the business by virtue of their investments. Okay? So please keep that in mind. The reason why corporations are so popular is because it's easy to raise money through companies. People prefer to put their money in a corporation as opposed to give it to an individual or partnership, for that matter. Mm-hmm. The other thing is corporations have what we call limited liability, which means that when you invest in a company, your investment can only be lost up to the amount that you've invested in the company. For example, if you're a sole proprietor and you own a business and the business fails, creditors can come after your personal assets, in case you didn't know. So if you have a car and a house and a dog and a cat, they can take everything. But be careful. Same thing with a partnership. If the partnership fails, creditors can come after your personal assets of the partnership, meaning your personal individual stuff. Okay? In a corporation, you cannot do that. If the corporation fails, that's the extent of it. Whatever you invested, you lose it. That's it. They cannot come after your personal assets. It's a nice thing to know. I can assure you. In case you may not have thought about it lately, this thing here, see? Anyone ever heard about this? Ever heard that?
I gotta read this off. Only power.
She said, what the hell is that? Yeah, no, not those. Knowledge is power.
I know power is to the one.
Ever heard that? That's okay. I would not have left you in the dark. That's the purpose of knowledge, not being left. So you could say, what the hell is it? That's the whole point. Okay? Anybody knows what that means? Or you just like, it's just a cliche?
The more you know.
The better you?
The better you.
Yeah. Because if knowledge is power, ignorance, not only is it bliss, but it's hell to pay. Ignorance. Now, when you call some people ignorant, they get mad and say, why are you calling me stupid? You stinks up from the Bahamians. Because they don't understand that ignorance doesn't mean you're stupid. Ignorance just means that you don't know things about things. That if you don't know can be very detrimental to you. Okay, so my wife, here's what she does. She's like artistic. So what does she like to do? She likes to do praise dances. You're getting those chicks in church. That's what she wants. That's what she loves to do. And she doesn't want to do anything. Now in the old days when she first started, when she was like a little, she worked in the bank for a little while, and then after 10 years or so, she came to me with this thing like, can we talk? I'm like, oh, this is not good. She said, why don't I stay home with the children? See, like in the days of Noah. And this made, I don't know what the hell was that song. I think maybe I was thinking about my children and yeah, that's good for them. Not thinking though, that means only what? One? This made, let's give it a freaking shot. When I think about that in retrospect, I'm like, what the hell was I thinking? So after that for a little while, she got into this thing. Then she got like, that's all she on. Every week, she wants slim. So my wife is like an angel who fell on the, see, there's a lot of things she's aware of a lot of things. She's not completely, but a lot of things she's really not. Because she's like, this thing. So sometimes I'll try and tell her stuff like to move her from a little bit of this, like, and that's okay. She knows stuff because she's been around. There's a lot of stuff that she doesn't know that can still hurt. And so I try to throw stuff off so that people don't get the what? Better of her.
So like she in church worship, but
to some extent, she isn't completely going to ting them now. I hope.
yeah,
You can always, you can tell. But yeah, knowledge is power. Be careful what you don't know. We all are ignorant to some extent. We don't know everything. That's not what I mean. But whatever you could know that can be beneficial to you, you should try to know. Does that mean you go out frantically? No. But it means when it comes to you, don't ignore it like, I don't need it. Leave me alone. Stop giving me advice. People hate when you try to tell them stuff. Okay. All right. I was never like that. Somebody can read stuff like this and listening. I'll never act as if I don't want to be bothered. I'll stand and listen even if I'm busy sometimes. Because sometimes people have things to say that could be of great value. A lot of times we don't stop to. No, we don't. So we're busy. We're more brilliant than them. We are. Whatever the hell it is. All right. So, having said that, those are your three basic forms of businesses. Keep those in mind. Move right on to page 6, where we start getting into the nitty-gritty of accounting now. Now, don't get me wrong, all of that stuff is absolutely crucial. Without that other information, you can't be a good accountant or person in business. That's really the whole point. The next important thing, other than what accounting is all about, forms of businesses, etc., is this. This thing called the accounting what? Anybody figured it out yet? Starts with E. Yes. That is the fundamental foundation of the accounting process. There are a lot of things coming out of that. What is the equation that is given in your text? Assets equals liabilities plus owner's equity. Wow. Learn it by heart, learn it by any means possible. But learn the accounting equation. It's very foundational accounting, whether you do accounting 1 only, accounting 2, accounting, any number of accounting. It'll all come back to this in one form or another, no matter what concepts you learn, and you will learn quite a few this semester. All right. So, what are assets? You will find when you do your reading that assets represents everything a company owns. Simple explanation. Doesn't stop there. You'll see later how we expand it. But for now, what you need to know is that assets represent anything a company or individual or entity owns. Do you have any assets, young man? Let me think about it. Well, let's go back to the definition. Anything you own is an asset. Do you have any?
probably not.
Probably though. Because if you say probably not, what you're saying is you don't own anything. Because you think you need to own like a car, property, money in the bank and all that. Is this textbook yours or you borrow it?
Yeah, this is mine.
Okay. Anybody can spell glory? That's a Bahamian word for borrow. I haven't heard that in a while. Yeah, we borrow that. My son, my oldest son, Samuel Jr. works in New York and lives over there. He's an IT guy. But he is spoken kind of formally for most of his life. And maybe I'm responsible for that, even though I know Bahamianese and I speak Bahamianese at home when they were growing up. But for him, the standard language stopped. Not so much Bahamianese, but he knows some Bahamianese. They just don't use it. So sometimes he'd call me from New York and say, just to hear me use somewhat. But dialect, like Bori. Say, Daddy. I'm just calling so I can use the dialect, like Bori. And we have another word he likes to hear. It's called voice. You know that one? I can voice. Yeah, I can voice in your head. Yeah. If you hear that, nobody else in the world can say that except for him. No one. So he gets off on that crazy stuff. So yes, that's your textbook, yes? You didn't borrow it. No. Therefore, that is an asset because you own it. See my point? The shirt that you have on your back, did you borrow that? Do you own it?
Yeah.
So therefore, your shirt is an asset. See how that works? All right. For a company, the company will have assets like what?
Whatever.
Like equipment, building, stock, vehicles, bonds. Yeah, building is an asset, definitely. Cash.
Purchases.
Yeah, purchases. But what do you mean by purchases? Is inventory. Yeah, purchases of supplies, purchases of inventory. Yes, they are all assets. Okay, anything a company or entity or individual owns is the asset. Now, the liability, on the other hand, is everything a company or individual owes. Anybody has a credit card?
That's why I say the building might not be yours. They might be paying that back.
Oh, good point. Except in accounting, even though you have a loan against it, we still say it's an asset. We still record it as an asset. But what we do is we offset it by also recording the liability against it. You follow? That's the beauty of it.
Like a mortgage.
Yes. So accounting doesn't leave out anything just because you owe on it. We will record it as your asset, but we will also show what you owe on it. That's why when we're talking about people's real wealth, we're talking about their net worth. See, net. What does net mean? After you take out all of your expenses or liabilities. So if you have a house that is worth 200,000, yay. But if you owe 190,000, what is your net worth? That's all you own in it so far. So in this equation, we'll put your asset as 200,000 because that's what accounting is all about, recording it as it is. But on the other side of the equation, we will also put your debt, which is the liability of 190. So your equity then becomes, who can make a guess? $10,000. Because these two must always be equal to this. Does anybody see that already? This must always be equal to these two. Now, some people get that quickly and other people take a little bit. That's okay. It's the hare and the tortoise syndrome. If you get it quickly, fine. If you have the tortoise thing going, that's okay as long as you eventually get it. Okay? Yes. Now, that's what I'm talking about. I have a question.
The expenses also considered liability. Expenses and expenses. No.
That is a great question. That is a great question. Very important one. And the answer is no. Okay. A liability represents the company's debt. When I say company, I mean individual, any other entity. Okay. Sole proprietorship, partnership, corporation, any entity. Individually as well. So the liability represents debt. The expenses, as you will see in the very near future, represents what we call in accounting, not debt. See, debt is the result of borrowing or borrowing. That's a liability. Expenses represents the cost of doing business. And what business are we referring to? The cost of what? Generating revenues. Why do we go into business? To sell goods and services, don't we? But in selling these goods and services to increase revenue, we have to spend money to do it, correct? Like we have to pay salaries, correct? BEC, BTC, vendors, etc., don't we? These items here, we call them expenses because they represent the cost of what? Generating revenue. In other words, you cannot generate the revenue without incurring these expenses. And that's what we call that, which is different from liabilities or debt or borrowing. Okay? We don't refer to expenses as borrowing, and we don't refer to debt as expenses. So that's an excellent question. And make sure you keep them separate. The two shall never become one. Not in accounting. Now, if you've had a few drinks, you want to play with it elsewhere and try to mix it up, fine, but not in accounting. Okay? We don't mix them up, ever. Okay? So, now you know, this is an all-important equation. Sleep it, sing it in the shower, make sure you know it by heart if necessary. You will come into contact with it many times before this semester is over. And if you do any accounting at all in your work, you will see it in other forms as well. Now, owner's equity. Owner's equity is another interesting, this one, this part of the equation. It has two unique sections. One is called the investment that is made by the owner, and the other one is called the withdrawals that are made by the owner. Okay, so the owner's equity is really your investment in the company. Okay. Whatever you put into the company is your owner's equity. Okay, so you have the investment side and withdrawal side. What is the withdrawal side? Any money you take out. For example, if you own a clothing store and you invested $50,000, $50,000 would be your investment to start the business. But if a month later you decide you wanted to take your bestest girl to Greece, you take $10,000 out of the company money. Mind you, you're not going on company business, you're going on. So you already started mixing it up. So you're already violating the what? Separate entity concept. Because what are you doing? You want to impress her, guys. So you go into the business and yuck 10,000 or 50,000.
Guys and females, you know.
Chicks do that too? Historically, only guys do that kind of stupid stuff. Chicks? No, chicks do a little, like she have to be totally insane. Yeah. But that's very seldom. Yeah. But guys do it too often.
Yeah, but they people on the date, say that's go
Maybe it's something right.
Well, maybe
I'm just reading it.
Yes, you are. Cameron. Especially Cameron's only 20. He's a prime candidate.
Let's ignore it. Let's ignore it.
To get?
Knowledge.
Cameron?
Take it.
Good thing you came to this class. You thought you were doing accounting. Cameron is 20. That's sick. I can't believe I was that old, that young. I looked at a picture of me when I was 20. I'm like, what the flip? That's me. Cameron is 20, so he's a prime candidate to get egged, my children would say. Egged, Cameron, means you get swing. You ever heard how's that? That's a Bahamian word. What does swing mean in Bahamianese? When you get swing, what does that mean? Did you know that, Cameron?
And they laugh.
You know that, Cameron? Yeah.
It ain't swing no more. We call like this. That means you got beat to pieces.
Oh yeah, they have another version of
Suck everything off.
yeah, you get sucked.
You get sucked.
Yeah, for everything. So usually money. Doesn't have to be money, it could be other crap too. Yeah. Okay. So they say the younger you are, the easier it is to get swing, Cameron. And the more beautiful she is, see, mother sick, beautiful. Sick. And then she like sexy, Cameron. You're a prime candidate, get swing. So whatever couple dollars you've been borrowing, wow. Don't do it. Because guys beg, steal, and borrow, trying to impress like sexy, beautiful chicks for some strange reason. Cameron? Good. He doesn't realize that he's being educated. Even like that. Good. If you're not doing it, don't do it. Because all it will bring you is, yeah, pain and suffering. And even a loss of life. That's how serious it could be. It's deep. Okay, so yeah. All right. So, oh, sorry, all that came from the withdrawal. So yeah, the only yeah, accounting will take you all over the place. That's the other thing. You think you're only doing debits and credit? Accounting will take you all over the place. Where it doesn't take you, I'll take you. For a little, yeah, so you don't get swing, Cameron. Let's see what have to do with accounting though. Has a lot to do with accounting. Because when you get swing, your money is gone. And then what is the balance in your cash account, your asset account? Nothing. That's another behavior word. I'm just picking on Cameron because he's a youngster. And youngsters are prone to get swing easier. Now, older people get swing too, but not quite as easy.
He was there when we was 20.
Of course.
I was there.
A lot of guys were there. Some turned 40 and still there. Some are 60 and still there. And some are like 87 like that, still there. It's a strange irony. Yeah. Counting. And all of these can be accounted for, by the way. Accounting can account for just about anything as long as you can convert it to monetary terms, which we can if we want to. That's the beauty. All right. So withdrawals is what you take out. When you invest in a company, you don't want to be taking out money randomly. Because sooner or later you keep grabbing, you're going to affect your cash flow, and sooner or later you won't be able to pay your, who said it, expenses. And once you start being unable to pay your expenses, sooner or later that business is going to suffer and close, which happens a lot. Because what happens is a lot of times when people are making revenue, they don't keep a check on their expenses. They don't have somebody who knows what to do the books for them so they can see what they're doing with their spending and why and where, etc. And then by the time they realize that there's a problem, there's a cash shortage, there's money's outstanding, bills to pay, eventually they can't pay those bills and they have to close their doors. Happens to companies all the time, all over the world. Okay? Happens even to people. The only problem is some people just kind of keep bouncing back on something or just lay down the road and call it a day, depending on who they are. Some people bounce back and some go right over there and lay down. That's it. They don't participate in the world anymore. Have you seen them around? Of course. You'd be surprised. They weren't always that way. Something happened. You'd be surprised. My. Okay. So that's something to keep in mind. Now, just bear in mind that revenues are generated by the sale of goods and services. Okay? Keep that in mind. Expenses is the cost of generating that revenue. Simple as that. Don't complicate it yet, because you're going to see a lot of little bits and pieces going on. Okay? Just keep it simple for the moment. If you look at the bottom of page 7, you will see something called apply it. whenever you get a chance and you're really feeling froggy, look at the apply it. The apply it section is just a practice session so you could see what you've done in previous page of 2 or 3, so that you can practice along the way. See my point? So you look at them and see if you understand it. That's the whole idea. For example, in this apply it, what do you think they're trying to show us based on what we just discussed? And you'll see that you don't need to be a professional to know that. You already have enough information. What are they trying to show us in this apply?
The assets was started on 140,000. Liability was 60. And owner equity, the equity what he started with is $80,000.
Any withdrawals? 24,000. And then by the end of the year, what happens? What is that figure at the end of the year?
130,000.
$130,000. So basically, what we're seeing here is the change in the business structure over the year based on what happens during the year. Okay. Now that figure at the end would have been considerably lower if the withdrawals were greater. You follow? This person obviously had some control over their withdrawal program. They generated significant amounts of blah, blah, blah. But the whole idea is to just kind of show you the changes that can take place in the business environment over a particular period. For accounting, usually it's a 1-year measurement. Okay? For example, financial statements, etc., are always based on 1 year of performance. So financials are usually done annually from 1 year to the next year. Okay? Now, these years in accounting have 2 names for your information. One is called a fiscal period, the other one is called a calendar year. If your accounting period is a calendar year, it means that your accounting period ends when? December 31st of each year. If it's a fiscal year, it ends at 12 months after any year, whatever you started, which is a non-calendar period. Can anybody give an example of a fiscal year? Fiscal year ending June 30th. What would be the beginning of that fiscal year? If it ends June 30th, what would be the beginning? 1st of July. Does everybody get that? From the 1st of July to June 30th, how many months is that? 12 months. So any 12-month period that doesn't end December 31st is a fiscal year. The government uses that word a lot. Okay, for those of you when you're reading the paper, you see fiscal, you keep reading, what the hell is that? Now when you see fiscal, you're like, what the hell? Because you know a little more. Yes. In fact, after these 7 pages, you're already a little more knowledgeable about certain things. People come to you with some crappy stuff, now you're like, really? So good thing. Don't try that. You should have come to me, what? A month ago. That's another word. Month ago. 1 month ago, I'd have been what? This. Yeah. Now, after tonight, folks, there's certain things people can't come with you tomorrow anymore. They could come. Okay? Even they can't even swing Cameron anymore now. So whoever that chick is, if she didn't do it yesterday, dog eat her lunch. Because now he's on the alert. Even though he was new before. He's on a great alert now. Oh. That doesn't mean be stingy, Cameron. Just means don't be the other word. Yeah, the count. You know that one before, the count. All right, page 8, financial statements. Let's have a look at them. There are 1, 2, 3 basic statements that we are going to learn at this stage of the game that you need to learn. Now, folks, don't worry if stuff doesn't come right away. This is new. See my point? It's like being a newlywed. How the hell you want to be a professional at everything? And you just got married, you just started working, you've just had children, you just no man, it takes time. So while you're working this stuff, if you run into difficulty, so what? Google it. Send me a note if you get stuck. Call someone in the class. Call someone you know, whatever. And unstuck yourself. But don't lose sleep. Oh, must be hating me. I should curse God and die. Why did I sign up for this? I should drop out. Don't do that nonsense. Just keep going. Okay? If you have to take a break watching Netflix thing in the series on something for an hour or two. Snooze off, get up, refresh, and go back. That's the point. All right. So, what are the three main statements that you are told? 1, 2, 3. What's the first one? The income statement. And the second one? Statement of owner's equity. And the third one? The balance sheet. Please, like the accounting equation, take a note of them. They are your three primary statements that you'll be seeing a lot of. I'll be assigning homework. I think already doing my homework. Remember, homework is not designed to make you miserable, even though you might feel miserable. I hated homework. When I was in college, I hated homework. Especially when you're undergrad, they give you homework all the time. Grad homework all the time. And if you're a working student, which I was like you guys, it's an even greater nightmare. Okay, so don't worry about it. Homework is not designed to make you miserable, even though you feel miserable doing it. Okay, take a break, sleep, go back refreshed, and just keep going until you're done. Start early. Don't wait until the last minute. Anybody knows what last minute stuff? Right before exam. Yeah, or right before the homework is due to bring in. Like, we have class Monday, so Sunday night you're sitting down. Anyhow, let me see. Sunday night. After having a ball the whole, God must be hating me. No, not at all. But they're saying you should have started earlier. All right. So, what are the tenets of the P&L statement? It's in your text. Make a note if you need to on the side. I don't know what you guys, I used to scribble certain things on the side of my text as well. The income statement equals revenue minus expenses. See that? Simple as that.
Revenue minus expenses.
Absolutely. Piece of cake. Now, if your revenues are 10,000 and your expenses are 7,000, because your revenue is greater than your expenses, this 3,000 represents what you think? Somebody make a guess. Not income. This is the income here. These are the, this is income, this is expenses, and this difference here, what do you think that represents? Profit. Profit. Whenever your revenue is greater than your expenses, you will generate a, and that's what every company wants to do every year if they could. Okay? Because the opposite is also true. Whenever your expenses are greater than your revenue, you're no longer making profit, you're now making losses. And eventually, if you suffer too many losses, you have to close your business down. That's it. Okay? Yeah, it stinks. And you really don't know the pain and suffering of having to close a business down until you go through all the trouble of setting it up, watching it work for a little while, and then watching it go to hell somewhere because of whatever. It stinks. It's like being married, Cameron, for 20 years, and then your wife runs over everything. So you take that, your dog. What have you done for me lately? And you have to go back home. The mother. In your room where you all over. After 20 years. Happens to a lot of people. Both male and female.
Mr. Wilkinson.
Hi. Hi.
So to find net income, it's the income statement equals revenue minus expenses. So to find net income.
The income statement equals revenue minus expenses to find net profit or net loss.
Okay.
Okay. Does that make sense? The income statement equals revenue minus expenses to find net income or net loss. Now, let me ask you a question. How does a company generate profits? What has to happen? Ivania?
They would have to make a revenue, eh?
Well, remember the rule. Whenever revenues are greater than expenses, you generate profits.
Net. Okay.
On the other hand, whenever expenses are greater than revenues, you generate
net loss.
Net losses, yes, or losses. Okay, that's another rule. Just like the rule of the accounting equation. There are certain things like once you get this fixed in your mind, a lot of things become easier. Okay, and they're not difficult to remember. And certainly by practice, it'll reinforce a lot of the stuff. But initially, if you can remember these simple equations, you'll find that it's not really complex and it helps a whole lot in getting through. Okay, so that's your income statement. Now your statement of owner's equity, that's the next statement. This is your investment account. Usually, as we will see later, your investment account will begin with opening balance, meaning the amount you invested in the business. Let's say you invested $50,000. If during the year you withdraw $30,000, your investment now becomes what? $20,000. If you didn't withdraw $30,000, your investment would have been what? That's what you see in the equity account. It shows you what you put in and what you've taken out. Okay, your equity account. Later on, you'll see that the equity account is also affected by two other accounts. First, plus revenues minus expenses. Okay, so let's say you put in 50,000, you take out 30,000 to go to Greece. So now your capital or your owner's equity is 20,000, but you generate profit revenues from sale of goods and services of 70,000 and expenses of 40,000. Now it gets a little interesting. Who can figure out then what the closing equity will be in the equity account?
20,000.
20,000? Anybody agrees or disagrees?
No.
No, not 20,000?
No.
Okay, that's okay. Remember, we're not here to be perfect. Somebody said 50. Who agrees with that? No. She was adamant. He was adamant.
No, I try to read it. Because you started at 50.
The opening investment was 50,000 that you put in the business that started. Took out 30. So now you have 20. Then you generated revenues of 70, which will make it what? 90. Okay. And you had expenses of 40,000, which will make it 50,000. Yes.
You write backwards. You got it.
It just happens that way.
Yeah, you write backwards.
But that's purely coincidence.
Right. All right.
But in the real world, you're not going to rewrite back where you started.
Right.
It just happened by coincidence. Okay? Because I could easily say your revenues were 60,000. Then we'd be here 40. Yeah. So the point is your equity account shows you the results of these transactions on your investment. Okay? That's the key. A lot of people don't even know what that's about. You talk to a lot of small business owners and when is the last time you done an evaluation of your equity account? What the hell is that? They say you should get an accountant. I don't need an accountant. All I like put my money in the bank. Yeah. Once I make my deposit, count my money like King Tut, I don't need no dog on accountant. The answer to that is that's not true. Because doing business is more than just selling goods and services and putting your money in the bank and paying your bills. A lot of small business owners think that that is all they need to do.
Sometimes you have to educate them.
You can try. Some are open to education and others are only open to pain and suffering. They will not listen. Okay? Especially. They're trying to save money. They know enough. They don't need it. And then if they're not old school, if they're contemporary, then they know everything. I'm a young businessman. I'll Google it. I'll YouTube it. You know, accountant. Trying to take their money. But they don't say that to Dr. Bingham, though. Who's taking even more money. Or lawyer Bingham them. Who's taking even more money. Your financial health is just as important as anything else. A lot of times people don't figure that out until it's too. Indeed.
So excuse me, Mr. Wilkerson.
Yes.
I take it it's not mandatory from the government's perspective to have your books audited or
unfortunately, no. The only mandatory audits that the government requires of financial institutions every year, they have to have their financial statements audited. But other businesses, there's no legal mandate from government to do it. You do it if you wish to do it so that you can make sure that things are going in your business the way they should. But other than financial institutions, there's no legal mandate forcing companies to do an audit. For better or for worse, that's the way it is at the moment.
I know the government be audit before the budget starts. They start the audit with all of that. I know that.
You mean the Auditor General's Department?
Yes, sir.
Which is a different matter altogether. He's talking about private audits, and yes, you're talking about the government audit, which is done by the Auditor General. The Auditor General only audits government accounts. They do not audit private sector accounts. Accounting firms like anyone? Anybody knows anything? Deloitte? Thornton? Yeah, Grant Thornton? Ernst & Young, yeah. PwC, and so on. These audit firms are the ones who audit non-governmental entities. And primarily the mandate is for financial institution only. But they audit other firms as well because, for example, Kelly's might have an audit done. See my point? The law doesn't require it, but Kelly's will do it just to make sure that things are on the up and up and that nobody is running off with their stuff. Money, inventory, anything else for that matter. Because people don't mind running off with a washer if they could. Doesn't have to always be money. I mean, food stores lose millions of dollars a year until for viewers run off with a case or two or three of cream. Some people start their own business on food store stuff they run off with. So trying to manage and watch your inventory in a food store, for example, is a big job, as it is anywhere else. Trying to safeguard assets. Yeah. And sometimes no matter how you try to safeguard assets, people still find out. But you have to have something in place to check, to try to keep the what? Crap at a minimum. God forbid. Okay. All right. And then the final statement, of course, is the balance sheet. Yep. And remember, we already know that the balance sheet is made up of the three elements of the accounting equation, which are assets, liabilities, yes, and owner's equity. Okay. Owner's equity can be owner's equity, or capital. They all mean the same thing. And for corporations, shareholders' equity. They all represent investments in the entities. Okay. And you'll become familiar with those as you go forward. Okay. If it's a sole proprietorship, you usually use equity or owner's equity, and sometimes capital. All three of them just mean the same. If it's a partnership, we use capital or partnership capital. If it's a corporation, we use shareholders' equity or stockholders' equity. They all represent investments, depending on the nature of the business. Okay? It's not difficult. Just need to become familiar with them and work it over a little bit. All right. So now that we know what the three basic statements are, we can go over to page 9 and look at these three statements with a little more confidence. Because now we're getting better at this thing we're doing. And then when you practice a little bit on your own, step by step, you'll be even better. Because accounting is a whole lot of practice. I mean, we could talk about it and discuss it and clarify issues and debate it and all that stuff. That's very important. But there's no substitute for practice. Okay. Anybody remembers Ivan Iverson from the Philadelphia 76ers? No?
Yeah.
Yeah, only a few of us. But what you remember of Ivan, he was prolific in his time, wasn't he? Did you watch him?
He was a great 6-foot player.
Yeah.
I remember.
When you get a moment, watch his clips for a few seconds. He was an amazing player. Yeah. Short, according to NBA standards, but dynamic. Okay? But the thing about Ivan Iverson was this. Nobody could keep up with him. Nobody was able to stop him. He was fast and quick, excellent shooter, which means that he put in a lot of work to get to that state. And then after the game, of course, you know, reporters ask funny questions. So Iverson, we heard you missed the practice. That pissed him off. He said, practice? Practice? They got him angry.
Too good for practice.
Not that he was too good. He's just saying, I've already put in years of practice. So what if I miss one? Stop talking egg. Because they keep trying to mess with people, say, like play around with stuff.
His attitude was like talking about practice.
Yeah. Don't you see what I do on the court? How do you think it happens that way? Do you think I just wish it that way? In other words, he's saying I've already put in the work. And that's the same principle. How do you get better at this stuff? By putting in the yes. There's no substitute like, man, I'm not doing that. I'll just see what I can figure out at the end of the day. No, no, no. Like everything else, you become good and better at it by putting in the work. There is no, well, there is an alternative, not putting in the work. Okay, but don't do that. I mean, you're already in this thing. This thing has a whole lot of benefits that you cannot see down the line. I'm telling you, when I was doing my accounting one, I couldn't see down the road. I was miserable. Like, why am I spending all my money and attending all these classes for 3 hours a night? Pulling out this nonsense. Who would have thought? Accounting paid more school fees, kept me out of so many scrapes. I was able to teach thousands of students in my lifetime and so on. But back then, standing in the line at COB, waiting to sign up for accounting one, I could never have seen, see? It's funny. I'm telling you. Cameron. So don't worry about it. Keep on trucking, because remember, you can't see right now. Like, what the hell? Man, the future looks a little, don't let that fool you. Keep on trucking. Because when you're young, you can't really see stuff. You get disillusioned. Like, man, I might as well just stop and drink. No, don't do that. Keep on keeping on. Especially young men, see? Yeah, because young men know how to sing support with the space as young ladies. People are always assisting young ladies, all kinds of stuff. But when they see this much in my room, find your way.
I have a question.
Yes.
And I had a question. Why is always a question? You said you have the same question.
What does the same push mean in English? I just wanted to
go. I asked remember what you just said.
Yes.
Like women, they have this and that, and then we need like that extra question.
Yeah.
I don't believe that.
You don't believe we need it? What do we need?
Yeah, money is our question.
Oh, money is our question. Yeah. Okay. Meaning?
What is the woman push? Why we always feel like women always have that push to expel more than a man?
Oh, well, that is a whole new age nuance. That is a very complex situation nowadays. See, remember, the world is changing its face, and some interesting changes are going on with that change. And some of those changes are very complex in nature. Okay? Perhaps as I come across certain accounting concepts going forward over the next 14 weeks, 12 weeks, or whatever that's left, I'll probably throw out one or two things that might help. Okay? But it's, things are getting very different these days. Okay? I saw in the newspaper not too long ago that a boy showed up at a school in Albany, in Nassau, at the whatever school the hell that is, in a dress. I guess in that school, they're trying to begin that craft that they're doing in the United States and Canada and Great Britain. Changing the whole landscape of God's original creation. I'm calling it whatever the hell we want to call it. Guys are changing and girls are changing their genitals and trying to call themselves the opposite of what they were born. Not understanding that doesn't matter what you take on or add to your body artificially, it doesn't change the biological makeup from which you came. Anything else is an illusion that will only lead to pain and suffering. That we still don't seem to get, and we're promoting this. I'm saying it's okay, it's legal, and anybody who doesn't agree is a bigot and all this stuff. Which means they're also calling God a bigot. How the hell did we get that freaking? See my point? Because this is all against God's what? Original plan and principle. He hasn't changed anything. Who the hell are we? Did you know when you were born? No, correct? All you know was you were in a house calling somebody mama, dada, correct? Cameron? Do you know when you're gonna die? No. I could be right at Cameron. And so the devil said, correct. Hold on. I don't know. But yet we're trying to mess around with God's talking nonsense. When I say that sometimes depending on who's in the room, what's your problem? Right. And my position is the same. I know my position, what is? Yours. Because you are sitting on sinking sand, no matter how you try to justify it. Mr. Minister of Health, see this color? No matter what color I put on top of that, does that change who I am? No. I could paint this completely white, my whole body, but I'm still a what? Negro. The same principle. And now we're passing this on to you, John. Right, so what does it do with accounting? It has, you'd be shocked to know what does it do in accounting. Because when all this kicks in, the whole of everything will have to give an account. See? Same thing, give an account. Why do you think we study accounting? So we can give an account of what's going on in business. But the principle of accounting doesn't only stop with what? Business and economics. Doggone it. So yeah, heading to my. So yeah, we're doing all this stuff. We need to do this because we get to do our jobs better, we get to be more involved. But we have to be careful that while we're studying all this stuff, we don't get stuck in the other crazy stuff. Yes, question. I love it. When I hear question, I'm like, yes. Even better.
I wanted to know, you heard that cabinet was supposed to meet about having Monday off as a holiday because of the Queen's death.
Stop it. I hope there's any truth to that.
And that sounds surprising. He said the next time cabinet meet, they would like to discuss having Monday off as a holiday.
Man, that would be heavenly for me.
So we'll be off from school as well, or what?
Good question. We have to wait and see. Oh, you mind it? Maybe we'll have to do it virtually. And then maybe we do not want virtually. You might say, oh, okay, you might as well do the rest.
It just came up, so.
Keep us posted.
I will.
Definitely keep me posted. You have my text, my number, right? Thank you very much for that. If you have any information that you can verify that's the truth,
yeah,
let me know. Even though I do not believe in monarchies, but I don't have anything against Elizabeth. Don't get me wrong.
No, I just
nothing personal. But it's time for them to stop wasting flicking. And especially taxpayers' money in Britain, especially. All those
they don't even need it.
Need what? Need to give them each one a couple million and say, that's it, break it up. And take the rest of the stuff and carry it like this to the treasury. Stop that nonsense. Those days are forever ago. Yes. And if I were to go to the UK, especially as they'll be like, I wouldn't be alive. You talking about Lizzie that way? They'll take it personally. And I'm like, it has nothing to do with Lizzie. Who's Lizzie? Queen Elizabeth. Has nothing to do with her. It has to do with all that money they waste every year doing nonsense. When people could be eating, getting a better education, upgrading the schools, old people don't have to be doggone. They could go and get free dentures. How about that? Not worry about somebody in Barrows. Man, while this gang just fan around, it's radical. It's not radical. It's called realism. That stuff that's a waste of time and money, especially money. If you guys know how many gazillions of dollars are wasted every year for during Lizzie's reign alone, the last 70 years alone, I wouldn't even go before that. Just the last 70 years with gazillions. I remember. Okay, so let's look at our statements. You see the first one is an example of an income statement. Whenever you do an income statement for me or anybody else in life, that's how it should look. I just thought I'd throw that out so you don't try and change anything. Accounting is very conservative. When we set up a structure methodology, we generally follow that straight through every time. Notice this income statement. What's the first thing on it? At the top. The name of what? Followed by the name of the statement, followed by the period for which the statement covers. In this case, for the month ending. If it's for 3 months, it'll be for 3 months ending, see? If it's for 1 year, it'll be for 1 year ending. You follow? But those, it's set up that way every single time. Don't put the income statement on top sometimes and then in the middle. You could do that. Well, we play around with that part of it, as that, instead of 4. That's okay. As long as you put the correct date on the third line. You follow? That's okay. As that, fine. Because you normally see that on a balance sheet.
Yes, I do.
Yeah. For the income statement, you'll see for the, okay? Because the balance sheet usually shows the assets, liabilities, and equity as at a particular date. And then after that date, the next day business continues again and things change. So the balance sheet elements will change. So it's a snapshot of the company, like when you take a picture of something, say cheese, like that. That's what the balance sheet is like. So you can see what the company's position is financially as at that day. Yes. Okay. So if you notice the elements of this income statement, it has what? Revenue, expenses, and then why is it net income in this case? Net income.
Because
Because,
it's a revenue.
yes, a profit. How do we get the profit?
Subtract,
The revenue is what?
the revenue.
Minus expenses. But yeah, the key is the revenue was greater than the expenses. Because you could subtract it, but if expenses are more, you're not going to get net income. The only reason we get net income because revenues were greater than expenses. Remember, if the expenses were greater than the revenues, then it would be a net loss. Okay? Yes. Once you get that little stuff down, man, it's not a piece of cake, but you're on your way. Okay? So that's your typical income statement. It's going to get bigger and bigger and bigger as we get further and further in the text. But no matter how big it gets in terms of elements that we add, what happens? The principle remains the same. Revenue, expenses, profit or loss. See that? Absolutely. Now for the balance sheet, the statement of owner's equity. Same thing, look at the heading carefully. Should be that way every time. Don't reinvent the wheel. When you have homework or exam or whatever, follow the same method. Don't change anything, don't try to become creative. Follow the same method. Okay. What's the first item in the owner's equity account? Capital. What do we call it? Notice the description. What's the name of that first line? T who? Uh-huh. In other words, T. Rowland's capital at the beginning of December was 0. No investment. Do you follow that, folks? Then what happened? Yeah, he invested how much?
$200,000.
$200,000. And then what happened?
Net income.
He generated what? Net income for the month of how much? Okay. Okay, and then what else happened? How much he withdrew? 2,200. And so therefore his capital at the end of the month, $206,000. See that? Question? Not difficult. And usually when you have a question in accounting, you will be given the data just like in real life. For example, if you have to prepare an invoice in the store, you'll have the amount of the item, the invoice number, the date, all that stuff you'll have. In accounting, you'll have the data. All you need to do is what? Organize it correctly. That's really the key. And that's where the practice comes in. So you can practice how to organize the information. So that these 3 statements is part of the communication process. Because we've taken all the transactions for the month or year and then brought it down to this. That's what fools a lot of people. They only see the end. Is there any fool can do that? Not really. It's a lot of things involved in this process to get it to the statement level. Of course, and a lot of principles govern a whole lot of things. These are simple financial statements for very small, itsy-bitsy, mom and pop thingy, sort of. But as the business gets bigger and bigger and more complex, a whole lot of other things are involved in determining these numbers. And that's the stuff you will learn over time in accounting 1 and accounting 2. And the thing with accounting is it builds on top of each other. So the concepts start fundamentally, simply, and then it gets more complex. Not impossible, just more complex than before, or different in terms of new principles that you have to learn. Okay? And that's just the nature. Question.
Mr. Wilkinson.
Yes.
This withdrawal that the
now that's what I'm talking about, because she's now thinking about looking at it. Let me see. Way to go.
This withdrawal that the investor makes, is that handled as a loan? Does he pay that back, or is that completely just always it's deducted from the capital? Is that ever recovered, I should say?
Kiss my foot. Even professionals don't ask such a valid question anymore. The answer to that's an excellent question. Here's why. Withdrawals, once they're taken from the company, typically the owner does not put it back. Unless it's the kind of owner that wants to do it right. You follow? Yes. So here's what they'll do. If they want to follow the proper business and accounting practices, instead of just yucking the money out, using it and calling it a day, they would set it up as a what? Loan. Yes. They would borrow the money from the company and seek to pay it back. That would be the more ideal way. But most owners don't do the loan thing. That's why we call it WD. What's WD? Yeah, they just withdraw it and it's gone forever until they put what? New money in from somewhere. Does that help?
Yes, yes, thank you.
Excellent, excellent question. What made you think of that question?
I don't know. I just thought of it, I guess.
Yeah,
because the money just keeps going. And I was thinking of loans.
Yeah, in other words,
how do you treat that? How do you treat the what do you call it? How do you treat the recording of it?
Aha. Now she's jumping the gun.
Oh, sorry.
No need to apologize. That's another excellent point because that is the next issue. The first problem is grabbing the money out of the business, which you should never do. See my point? Pay yourself a salary. Don't take money out of the business because you keep taking it out, soon the cash position in the company is going to what? Weaken, and soon you won't be able to pay. Simple as that. When the BEC bill comes, you don't have enough money to pay it because you already keep taking it out in chunks, which many business people do. They say, this is my company, I'll take out what I want. If you ask me about this again, I'll fire you. Stinky bookkeeper. I hired you to be, shut up, let me do what I do. You keep the books, don't question me. Some people are really weird with stuff. Okay? Unfortunately. So yeah, that's a good point. Okay. There is a journal entry, and hang on to that thought. The journal entry will come. All right, when we get into journal entries, which will be very soon. All right, and then of course the final statement is what we call the balance sheet. Now you can see the components of the elements of the accounting equation. On the left-hand side, we have all of the assets. On the top right side, we have all of the, and at the bottom, we have all of the owner's equity. When we add liabilities and equity, they always equal assets. That's how we know that our balance sheet is in balance. Okay, folks? Yes.
Because the second one, Exhibit 2, where Mr. Rowland, what is capital defined as for me?
Capital is typically the owner's investment in the business.
So he starts out with nothing, but then he invests 200,000.
Correct.
So why they just didn't put the 200,000 as a capital?
Good question. You guys coming with all the great stuff tonight. Because on the 1st of December, he didn't have any money. But he may have gotten it on the 2nd, 3rd, 4th, 5th, or 6th.
Sure.
So in accounting, we don't cross over. If we don't have it on the 1st, we don't say, well, we'll have it tomorrow, so I'll put it for the 1st. You follow? On the 1st, he had nothing, but he may have gotten it when? On the 2nd. And so we show it for on the day that he actually got it. Okay. Yes. So they tell us which day he invested 200,000?
Yeah.
No, but we know it's after the correct. Okay. Now, when we get to journal, does that help?
Yeah.
Yeah.
I get to December 1st.
Yeah, on December 1, he didn't have any money. But sometime after December 1, he got his hands on, some drug money maybe. Yeah. Source of funds. Any bankers in the room? Yeah, so verifying source of funds. Where did my money? Miss, I got to give my money back. You know, that's a problem. When they don't want to verify source of funds, which is a requirement under the law in the Bahamas, correct? As part of the KYC process. Persons coming in with amounts over $10,000 have to say where they got it from.
Not necessary.
Not necessary. I know.
Anything that's out of the norm, you have to say where it's coming from.
Yeah, for some banks it's of the norm. For others, anything over 10,000. Just depends on the institution. Absolutely. Some institutions take all kinds of money, and then when something goes wrong, then they hurriedly send it. Suspicious transaction report to the FIU. Like, oh my God. And in fact, who are the gatekeepers? The banks, not FIU. The FIU is only there in case a suspicious transaction occurs through somebody. But really, the banks are really the gatekeepers. They're the ones who are supposed to question transactions even before you start. The minute you feel suspicious, before it becomes something that you have to report, is, excuse me, where'd the money come from? They miss, I ain't saying nothing, but just take it or give my money back. Then you know you're probably dealing with a problem. Wire transfer coming in for $300,000. Where did it come from? So even before you process it, as a bank financial institution, you have to ask some questions. Where did it come from? Who is receiving it? For what reasons? Where is the evidence for the reasons? Now, anybody who can pass a kind of litmus test and follow through, then chances are you're on your way to legitimate transaction. But if you start running into bottlenecks when you start asking those questions, then that financial institution should be concerned about that transaction. But some financial institutions are just so excited to get money coming in. Yeah.
You're the ones who is close.
Yeah, or always in the thick of things, yes. Paying fines and doing stuff.
Yes.
Absolutely. All right. And now we have this other statement that's often referred to as the stepchild of statements on page 10, called the statement of cash flows. Because notice it's not on the same page with the other ones at the moment. And the statement of cash flows is oftentimes the one that creates most of the problems for students. Sometimes when we get to doing it, but not to worry. When we get to one later on, we'll see the basic steps in determining how cash flow statements are done. But first and foremost, the important thing to note is that the statement of cash flows in the financial statements is designed for reporting only cash transactions, nothing else. Cash coming in, cash going out. Cash coming in, cash going out. You will discover soon that in accounting, you can make a sale without receiving money. Anybody ever heard that? Of course. In accounting, we have what we call the accrual method. And under the accrual method, you don't record the transaction based on whether you get money or not, but rather whether you made a sale on it. So for example, if you sell a pair of shoes on credit for $300, here's what happens in accounting. You sell the shoes on credit. The minute you hear credit, that means you didn't get any cash, correct? So you credit sales. Somebody was asking about the journal entry for the withdrawals. That was you, Ivania?
No, sir.
Who was asking about the journal entry for the investment for withdrawal?
That was Shadell.
Shadell, are you there?
Yes, sir, right here.
Okay, just checking, because I just want you to know the rest of us hate you guys with a passion. Especially me. I'm the eldest person in this bloody room, and you guys are in there with your feet up, having coffee, drinking martini, and all that stuff while I'm standing up. If I was home, I don't know what this one would have been. Okay.
Oh gosh.
So you saw. If you're feeling guilty, that's good. That's my whole idea. I want you to feel guilty that while you guys are on the Zooming, having fun, we're just suffering at a desk. And my old, didn't even put a chair here.
Oh, Lord.
Life stinks. Okay. So you're selling shoes for $300. So we credit sales for 300 credit. Debits and credits will come up later. Don't worry about it yet. And since we have a double entry system, which we'll talk about later too, for every credit, there must be a debit. Okay. Now the debit portion of this will also be 300 because they have to be the same. See? The only question is, which account do we debit? We didn't get cash. So what account do we debit? Well, whenever we sell on credit and we don't get cash, we debit a very special account in accounting called accounts receivable. Yes. And accounts receivable is exactly what it says it is. You're hoping to get your money. If they come in later on, pay you. Okay. That's why you don't give credit to any and everybody. There you go. That's why she says we only give credit to government people. Government, nothing else. Because they can get an assignment, so the payment comes directly to them. And they don't have to rely on whether somebody will come in and make the payment or go to Fort Lauderdale that month. Yes. Okay. So we debit accounts receivable, we credit sales. Really? We have a sale, but we don't have any money, correct? So imagine if you give too much credit and people don't pay regularly, what's going to happen to you? You're not going to have enough money to pay your bills. So when your sister comes to borrow your rent money, should you lend it to her? I need it, Dad, but I pay next week. I'm going to eat soup. Should you give it to her? No. I get dead if I don't get it. Should you give it to her? Well, I don't know. But just know that once you give it to her, you're now at her mercy. And you will not get it back until she decides to give it back to you. See that? So when the landlord comes and she hasn't decided yet, what do? You either get thrown out or now you have to go to someone else to get a loan. And then you say, I'll pay you back as soon as my sister pays me back. And then that person has to say, see? So we have to be careful when we give credit in business. You have to know how far to go and have your act together. Otherwise, you give too much and you don't have a way to get it in regularly, dog eat your lunch.
What if I do contract?
Say again?
What if the business do contracts?
Meaning?
Meaning, if I have a business, that's like a furniture plaza. Like you sign a contract binding you to giving me this money back, and if you don't come through and give me this money back, then I will put you in court.
Indeed. We certainly can do that. That is certainly an option. The only problem with that is when you start giving customers that option, you better have enough cash float to accommodate when customers do not pay on a regular basis. You follow what I mean? So for example, Furniture Plus can give loans because they have enough people who pay regularly each month, even though everybody does not pay. But they have enough money hanging around somewhere. You follow? Bank overdraft, bunch of money from previous sales or whatever. So when those persons don't pay, they have enough persons who are paying, plus enough money from other sources to continue doing business. But that's companies like that. If you're a small, medium-sized company that relies on regular payments from just about everyone, and they don't follow through, you're gonna have a problem. Contract and no contract. And the problem with court takes up, suing people is a nightmare.
Yeah, that's money.
Indeed.
What I know about when you're suing somebody, you gotta take a loss as well.
Depending on the situation, sometimes it ends up in a complete loss.
Right, because I know in court, you can't sue for more than $5,000.
You could, but not in the magistrate court. You would have to go through the.
Right.
Correct. The point is, whether it's magistrate or supreme, you have to run people down to get them to appear in court. And then when you finally get them to appear, if you do get them to appear, and they say, I don't have a job, then you stop. Hopefully they have some asset that you can take a lien on, sell it, and see it's a whole long, drawn out process. Absolutely. Now, I'm not saying you shouldn't do that. I'm just saying it's not an overnight affair. And so whatever business you're in, whatever your agenda is, you need to make sure you can continue your normal life while you wait for all that stuff to kick in, for sure. Welcome to the real world. So yeah, that's a good point. And that works well for companies with enough cash flow, see? Enough money in the bank. But if you're not a company with a whole bunch of money in the bank, and you're just relying on month over month people to come in and pay, then you have to be very careful how you give credit. Right? That's why gas stations don't give credit, because people don't come back to pay. They go to another gas station, and you give too many people credit. When the big tank pulls up, you wouldn't have any cash to pay the tankers, and they don't accept credit. If you tell them you're waiting to get your money from somewhere else, they say, fine. When you get the money, we'll open the tanks up again. Until then, you can't sell another ounce of gas. So yeah, welcome to the real world. Okay. So the cash flow statement then shows all the money coming in, cash, all the cash going out. Typical cash statement is divided into 3 sections. Do you see that? What are the 3 categories for cash flow statement? Cash from operations, yes. Cash from investments, and cash from financing. Okay. Now, if you notice in that statement of cash flow, now you're not going to get this statement of cash flow tonight. Hell no. Okay. The idea is to introduce you to it, and when you go home and read and get into it and start looking at the components, don't let all the little bits and pieces scare you. Like, oh God, I'll just get that wrong in the test whenever it is. So don't do that. Go through the statement. You'll find that it's not as difficult as you think eventually. And wherever you get stuck, we get it sorted out. That's the whole idea. That's why we're here. Right? So the statement of cash flows has the same heading. It opens with what account?
Net income.
Net income? Where does that come from? Which statement is net income from? The income statement. I like that somebody turned the page. That's the way to go. You're not mixing me up, see? That's what you do. When you're doing your homework, don't try to remember everything out of your head. That's madness. Go back to your chapter and look and follow it tooth and nail. Because remember, you're just practicing. You're not here to be perfect overnight. There's no such thing. Okay? All right. So it starts off with net income, and then what happens? What's the next entry? So some adjustments need to be done in the cash flow statement under operations. Okay, what's the first adjustment? Increase in accounts receivable of how much? Okay. Now watch how we're gonna make this thing easier than it might appear at first notice. Okay, take a moment and look at it. Think about it. An increase in accounts receivable, is that cash coming in or cash going out?
Coming in.
Some say in, some say out. Well, when your accounts receivable increase, what does that tell you? That you did more credit. When you do more credit, is that money coming in? No. Okay, yeah. So see, this is why the cash flow statement is so critical, because now this analysis tells the owner some other crap that you wouldn't see in an income statement. The cash flow statement shows what? An increase in receivables, which means that that is a cash what? Outflow, because your credit is going up. And anytime your credit is increasing, you're not getting any money. Don't say, yay, revenues. That's okay. If you have a guarantee that your payments are going to be made. But just know that as those receivables go up and up and up, that's an outflow. That's not money coming in. So you have to be able to what? Manage your credit. By the way, until they decide to put us on Zoom, Clay. Until they decide to put us on Zoom. Next time I'm playing. See these two chicks? Man, that's disgusting. Because they're home sitting there in their pajamas. Look at us at a desk. Look at me on my feet. By the way, did I say last week if I fall off my feet, would it take me?
No.
Not over there. Yeah.
But they said no.
Who?
I mean, the powers.
Oh, that's true. You were not here when we were having that discussion. They said that they presented the class as a face-to-face. And so they wanted to like insist on it. And then I said, well, would prefer not to, would prefer Zoom. And then before I got in class with the Prime Minister and the cabinet and all that, I just kind of backed off. I'm like, okay, I'll let the voters. So it's up to you guys, okay, how you want to put the shit back. All right. So increase in accounts receivable. Oh, I was about to say, until that happens, you can bring, if you need to bring stuff like to eat in class, bring it. Unless they say, put up a sign like, do not eat. I don't see that yet. But if you need to bring something you want to eat, coffee to drink, whatever, something to munch on, feel free to do that. Okay? If you need to stop and doggone, go to Kentucky, well, you know what I mean. That's fine. Because we're here for quite a while, aren't we? If you were home.
They don't that stuff. Didn't I see something so last week? Monday,
really, that stuff out there?
Yeah.
They there?
Free?
No, I don't know that. But I know.
Oh yeah, I didn't have to buy it. But yeah, if they're selling stuff, you can go out and buy stuff and whatever you need to do for the 2.5 hours, 3 hours that we're going to be here.
Why don't we get off at 8:30?
That's the plan. See what I mean? She was ready to go. Now she was home, she wasn't ready to go. She just snoozed a bit and then I get up. So yeah, coming out of classes. Okay, so accounts receivable increases by how much? That's an outflow. Is that in brackets or not?
Yeah.
So for all intents and purposes, an outflow of cash is represented by brackets. Okay, what's the next entry? Inflow or outflow? Why? Because you have to spend money to increase supply. See how easy to get all of a sudden? When a minute ago, it's like cash flow statement. I know that. Next entry. Increase in accounts payable, inflow or outflow? Why?
Someone paying something.
Well, no. Sorry?
We are paying out money.
Not paying out.
Somebody paying.
You guys are getting warm. Notice outflows have brackets, inflows have no brackets, correct? Because this increase in payables, bracket or no bracket? which is an inflow. Why is an increase in accounts payable an inflow? Because you didn't? She got it. This should get, because you didn't? Yes. Whenever you don't pay a bill, that's an inflow for you because you get to keep other people's bloody money. Everybody gets that? That's why people's payables are sometimes so high because they're not paying their bills. They're using the money that they should be using to pay other people, vendors and others, for their own personal use rather than what? Pay their bills. We do that on a personal level too. We owe people money when month end comes and I have stuff to do. As if the other person isn't waiting for their, excuse me? And to hell with them. We dock them. And we use other people's money to do what we feel like doing until we feel like paying them. So if you pick up an account, a balance sheet, and you see accounts payable continue to be higher and higher every month, every year, you know that that company is probably in trouble, correct? They're not paying their bills. And sooner or later, if you don't pay your bills, eventually, creditors are coming after you and demand it and go to court and shut you down if necessary. Sell your assets and pay it. See? Increase in accounts payable. What's the next entry? Net cash flows equals? Does anybody know how we got the 4,800? Can anybody do the math from the beginning to that point? How do we get the 4,800? What do we do? Uh-huh. Do we subtract increases? Wherever we see a bracket, what do we do? Subtract. Wherever we don't see a bracket, what do we do? Add. Oh, by the way, I don't know if I said it last week, but you need a calculator for every single week until the final examination. Sorry. Every single class, you need a calculator. So if you put those numbers in the calculator starting with net income, add those that are not in brackets, subtract those that are in brackets, you should get that, you should get 4,800. Right. Okay? Face closed. See that? All of a sudden, it's not a nightmare anymore. It's doable. Okay. Next part, second part of the cash flow statement. What's the next line? Purchase land. Inflow, outflow. What heading is that under? See, that heading is important. Cash flow from investing. First it was operating, right? Now cash flows from investing. When you purchase land, is that an inflow or outflow? You guys pick up on this crap quick.
Also.
I give you guys a secret. She said, I don't know what you're thinking about. I see the bracket. But we know that when we purchase something, it's an outflow, a bracket or no bracket. Okay. I just tell you the bracket thing to make it easier for you to do the math. Okay. Next line. Next investment.
Purchase a building.
Purchase a building. Inflow, outflow. For how much? Any other investments? No. Total investments? In or out? Out. What's the next line?
Financial activities.
Before that? Yeah, net cash from? Investing activities equal? Yes. The third and final phase of the cash. See, all of a sudden this cash flow statement that looked like a monster at the beginning. That's what I'm telling you. Don't panic. Most students look at man, I'm looking at that. Because accounting students always hated cash flow statement. Even accountants hate it. Who's supposed to be doing it? Okay, because there's a lot of final phase. Cash flow from? Financing activity. Financing in Bahamianese is borrowing. What's the next line? What is it?
Investment 200,000.
Oh, investment by owner. 200,000 inflow, outflow.
Inflow.
Yeah, inflow, because the owner puts money in the business. Next line. Inflow or outflow? Yeah, see that? What's the next line? Equals?
197,600.
How did we get that? We subtracted what from what? You had a withdrawal, see, from the investment. And the net amount is?
197,600.
Absolutely, see that? And let me tell you a little secret. I didn't like tell you guys, like chit chat about it just for the hell of it. To see, part of the deal is the more you say it, the more comfortable you get with it. Like, for example, if I just said everything into and man, then you don't get a chance to talk it, speak it. It's just like people who don't say like to their wives, I love you, sweetheart, but it's time to you didn't haven't told me you love me for a long time. I mean, Vince, he said, when I buy you stuff, to see me anymore. He doesn't want to say it because he doesn't really ever say it. And if you don't really, if you don't say it too often enough, then it's hard to say. It sounds funny coming up. Oh.
I buy you flowers, that's it right there.
Yeah, and they buy you flowers, man. You see that? Well, me gonna tell you, I'm showing you, I gotta say I love you. I say whatever, because you don't practice it. Okay, same principle. The more you practice and say it, the more comfortable you get, and the easier it is to deal with it. I guarantee you. All right, are we done with the cash flow statement? No. What else is kicking? Which is?
62,400.
62,400. How did we get that? Go back to the top for net cash from operating, net cash from investment, and net cash from financing, and add them. Remember, add means whatever has a bracket, you subtract, and whatever doesn't, you add. If you do those together, what do you get? 62,400. Everybody see that? Absolutely. Now, don't let this be the last. Well, right? Go back. Yeah, go back, of course. And well, if you stuck on something when you go back over it and all that stuff after you sleep and get out of the remember, make notes so that when we come back next week, you can raise a question and make sure you get it clarified in your mind. Okay? All right. So please go ahead and read chapters 1 and 2. If you have not done so, obviously, a lot of us may not have done that. And when we come next week, we will finish. There are only a couple of pieces in 1. We'll finish 2, and then we'll go from there. So far, we're only about a chapter behind, but not really behind. That's just my schedule for you guys. By next week class, we would have finished the first 2 chapters, which is exactly where I want you to be. And then I shall be assigning homework. Okay? For those of you who feel really, really froggy, go ahead and read chapter 3 as well. But certainly by next class, you should have done chapters 1 and 2 completely. And then go as far into 3 as you can, because we'll be rolling right along. And the more read up you are, the more comfortable you will be with the blah, blah, blah. All right? You guys have a safe week. Remember, COVID is still out there. I saw in the newspaper that 7 more people out from COVID. Okay? Didn't get the memo. So when all of us can make it soon. No, we're not finished. It's not. It's very much alike. No homework tonight. Your homework is to go ahead and read chapters 1 and 2, and as far into 3 as you can. I will be assigning homework next class. Okay, so be ready.
Good night.
Good night, everybody. Take care. Take care. Be safe. Before the rest of you leave, let me just make sure I update my thread. You were here when I called you? Yeah, okay. Ashay. What the heck is Ashay? Doggone, she mind doesn't tie it up. Okay. Charity. Saul has a title.
She was online, but she already left.
Okay, she was in.
Yeah, she was on online.
Okay, perfect. Thank you for that update. Okay, you guys who are having fun online, I'll see you next week. Same place, same time. Just know that all of us in here hate you with passion.
Okay, sir. Thank you.
All right, take care. You guys be safe out there, okay? Take care. Careful out there. Getting home, okay? Stay on the main roads. Good night, good night. Take care. Good night, take care. Awesome. Oh, and both. Take care. You look like it's fun. What are they? Oh.
But once they come home,
Exactly. That's the thing, so did I. Okay, perfect. You will survive. I have been there exactly what you want. From